So what is negative gearing? It's a great word. Everybody loves it. Everyone loves a tax deduction. But what actually is it? Okay, here's the maths. It's quite simple. I've got income coming in of, say, $100. I've got deductions such as agencies, gardening, strata levies, etc. of, let's say, $80. I've got interest deductions on the loan of $40. And I've got depreciation on the building, which is also a deduction, of $30. That means I've lost $50. That $50 can be offset against my other income, say salary and wage, reducing my overall tax expense. When I go to sell a property though, I get a deduction on my capital gain. So what does that mean? Well, it means if I'm making top marginal rate, I've got a 48% tax saving because that top marginal rate, $50, which saves me $25 in tax. When I sell the property, I'm only paying effectively 25 cents the dollar because I got half a capital gains tax. So I've got a big tax deduction of 48 cents the dollar. I pay capital gains at 25 cents the dollar. So roughly speaking, I'm saving 23 cents in the dollar. It's fantastic. But of course, economically, it's not the greatest outcome. But from a tax perspective, this is how it works. The one trick though about this, and the thing to remember about this, is that the deduction you get for depreciation is actually taken into account when you sell the property. Does this still work economically and from a tax perspective? Absolutely. Because you've got $30 of tax deduction at 48 cents the dollar, and you're paying capital gains at half that rate. So overall, you're much better off. So as long as it's in place, and one day it will end, government pressures and budget pressures will mean that negative gearing will probably end at some point in the future. But as long as it's there, you're getting a wonderful, wonderful tax arbitrage between those two things.